Okay, hello everyone, and thank you for joining us. Everyone should now be logged in and able to view the presentation on your screen. If you're having trouble seeing this presentation, click that link in the email you received. You might have to refresh that window a few times. Keep in mind, we'll have time at the end to do some Q&A, starting with the questions that were submitted during the registration process. We'll send a link to this webinar's recording after we conclude today, and of course, since it is being live streamed, you'll be able to watch it on YouTube as well. Please feel free, share this link with others within the organization. The more the merrier. We're glad to have you today. So let's get into it. My name is Brock Klinger, and I'm the Director of Sales and Marketing here at Harbor Compliance. And just for a little bit of background on who we are and what we do, Harbor Compliance is the multi-state compliance provider of choice for over 40,000 clients. We're a nationwide provider of registered agent, business registration, and licensing services and software. We also extensively support nonprofit organizations, primarily through Labyrinth, our nonprofit brand. And up on the screen, you can see a number of the organizations that we serve. Some big names up there. We're thrilled to be working with them. And that Inc. 5000 award needs to be updated because we just won our sixth one. So we are now a six-time Inc. 5000 winner. Fast growth company and really well positioned to help organizations navigate these sorts of challenging issues. So looking forward to educating you all on that requirement today. Let's get to the table of contents. Today, we're going to talk about one of the buzziest topics in business compliance, if that's such a thing, if there is such a thing as a buzzy topic in business compliance, beneficial ownership information, or BOI, reporting requirements brought about by the Corporate Transparency Act. So here's the agenda. We will be covering beneficial ownership information reporting requirements, why maintaining BOI should be a priority, what it takes to file a BOI report, and how to manage and simplify the BOI reporting process. This presentation should be roughly 30 minutes in length, and we'll have 10 to 15 minutes of Q&A towards the end of the presentation. But before we dive in, I have a brief poll question. I'll have several of these throughout the presentation. I want to gauge how familiar you are with this requirement. So give me just a quick second here. We'll launch our poll. Okay, should be on the screen now. So how familiar are you with BOI reporting requirements? No shame in this. It's okay to say you have no idea. I get that answer fairly frequently as I've interacted with dozens and dozens of clients on this very topic. By this stage of the game, unsurprisingly, most of you are in that second category. You heard of them, not totally sure if they apply to you. That's par for the course. That's the most common answer that I'm getting at this point. We're towards the end of August now. It's hard to believe we've come so far so fast. And so we're not that far from the filing deadline for a lot of organizations, especially as though those that existed prior to this year. Nobody, there's a lot of truthful people on this call today. Nobody has stated that they understand them thoroughly, and that's just fine. We're going to hope that at the end of this presentation, you can count yourself in that category. Thank you for those answers. Okay. So I'm going to go ahead and apologize right up front. A lot of acronyms today. The federal government loves its acronyms, so you're going to hear quite a few of them. I'll define each one of those as we go through here so we can make this as easy as possible. Let me start first by explaining the why behind BOI reporting. What's this all about? The whole reason BOI reporting is now required is to accomplish the objectives of a law that was passed by Congress back in 2021. It was known as the Corporate Transparency Act, or CTA. Now, the CTA was passed as part of the National Defense Authorization Act, and its primary objective is to prevent money laundering, terrorism financing, and other illicit financial activities by promoting transparency within corporate structures. So, how does BOI reporting support those objectives? Well, it requires most organizations to report information about the individuals who control their operations to the federal government. These individuals are known as beneficial owners, hence the term beneficial ownership information reporting. And by revealing the individuals who benefit from a business, it becomes more challenging for criminals to operate that business anonymously. So you're familiar with the saying, follow the money? BOI reporting allows the federal government to more easily follow the money and identify bad actors behind complex corporate structures. For legitimate businesses, beneficial ownership reporting promotes a more transparent and trustworthy business climate. It helps prevent unfair competition, from entities engaging in illicit activities, creating a more level playing field for all businesses. While the CTA is a federal act, multiple states are actively considering or have already passed similar requirements. So, for example, New York's LLC Transparency Act was fully enacted in March. This new requirement, which applies specifically to New York LLCs, takes effect in January. California, Maryland, and Massachusetts, and North Dakota are also considering bills that will require additional state-level BOI report submissions for entities within their borders. And we'll focus on the federal requirement in today's webinar, but you should be aware that these state-level requirements are on the rise. So let's first establish what FinCEN needs an entity to report. What is the information they're looking for in these BOI reports? At a high level, there are two types of individuals that FinCEN is most concerned about. Number one is beneficial owners. Number two is company applicants. In both cases, we're talking about natural persons. That's the way they define it, aka human beings. Okay, these are people. Beneficial owners are defined as persons who either have 25% direct or indirect ownership of an entity, or the other test would be that they exercise substantial control over the entity. FinCEN does not require reporting of parent-subsidiary entity relationships. That would be full org structure. That's not necessary. It only requires the people at the very top. There must be at least one beneficial owner for each entity. The other category is company applicants, and this one only applies to entities that were formed on or after January 1st of this year, 2024. A company that must report its company applicants will have only up to 2 individuals who could qualify as company applicants. These are the individuals who either directly file the document that creates or registers the company. And if more than one person is involved in that filing process, whoever it was who was primarily responsible for directing or controlling the filing, that would be the other one. So a simple example might be, think about a paralegal who files an incorporation document working at a law firm, and the attorney or the client, perhaps, who directed them to do that filing. Those two would both be counted as company applicants. FinCEN's requirement to report company applicants adds complexity when law firms and service providers create the entity. So, for example, an entity that wants to file BOI on its own must ensure it gets the company applicant's info or their FinCEN ID from that vendor. They have to collect that. If that entity hires vendors to form the entity, keep in mind the current 90-day deadline to file BOI, moving to 30 days in 2025. Practically speaking, it's a good idea to choose a provider that can form the entity and handle the BOI report inside that time frame so that you don't have to pass that information around. It's all in the same place. The person who did the formation can then move on and do the BOI report. Regardless, it's a tight window, so don't delay on reporting BOI for new entities. Now let's take a little bit deeper look at what a beneficial owner actually is. Again, for starters, it's a natural person. Beneficial owners cannot be business entities. In addition to being human, they either exercise substantial control over a reporting company, own or control at least 25% of its ownership interests, or both. The ownership test is the easier of these two to understand. Pretty straightforward and simple, right? If you own at least 25% of a reporting company, either directly or indirectly, congratulations, you're a beneficial owner. It's that simple. Substantial control is a little bit more nuanced, though. So we'll break that one down. Substantial control exists if the individual is a senior officer of the reporting company. This includes all senior officers, including, but not limited to, the president, CEO, general counsel, chief operating officer, chief financial officer, etc. But it's not really the title that matters. Even if their title is janitor, they may be beneficial owners if they perform the functions normally reserved for senior officers. The other one would be if they can appoint or remove senior officers, board directors, or similar bodies, or if they control important decisions about the business's direction, its finances, its legal structure, etc., or they have any other form of substantial control over the reporting company. And that last bucket, that last criteria, is a catch-all. That ensures that unique or creative control structures, they can't circumvent the reporting requirements. The agency responsible for collecting BOI is the Financial Crimes Enforcement Network, or FinCEN. FinCEN is a division of the U.S. Department of the Treasury, and it has issued much of the educational information about this requirement. It's developed the filing process, and it's overseeing the enforcement. There's a quote on your screen, which is from FinCEN, and it describes how BOI helps FinCEN to accomplish its purposes. It says BOI can provide essential information to law enforcement, intelligence, and national security professionals as they work to protect the United States from bad actors who exploit anonymous shell companies to engage in money laundering, corruption, sanctions, and tax evasion, drug trafficking, fraud, and a host of other criminal offenses with impunity, while legitimate businesses suffer from their misdeeds. A quick aside on this new requirement. Now, as I mentioned at the beginning of the presentation, I've personally spoken with dozens of business owners on this topic, and my staff and team have spoken with many, many others. We've discussed the BOI reporting requirement and the CTA in general, and there are really two things that stand out. Number one is just how little awareness there is around this topic. Despite the fact that the reporting window has been open since January 1st of this year, most business owners haven't been keeping up with the requirements. In fact, as of mid-May, which is about the last time they published numbers on this, only about 1.8 million BOI reports had been filed. That's less than 5% of the total estimated reports that need to be filed this year. And it might actually be a little bit telling to think that, hey, the last time they rolled out numbers on this was mid-May and they haven't updated us since. It makes me think, I'm not sure it's really getting any better if the volume has really increased substantially. If it were, they'd be shouting it from the rooftops. Thank goodness we're on track to have all 32 million reports filed. No one's saying anything about the volume anymore, and that's a little suspect. The second thing that we frequently hear, that it may actually help explain the first, it's that business owners are just expecting, trusting that their accountants or their attorneys are going to at least notify them of this requirement and potentially handle it. They're actually trusting that that accountant or attorney is going to jump in there and do the filing on their behalf. And this is where business owners should really sit up and listen. In general, most attorneys and accountants do not plan to offer BOI reporting services for one of a few different reasons. And we know this for a fact because we've spoken with many of these firms as well, and we in fact partner with many of them. So first up is that completing BOI reports involves the collection and storage of a bunch of sensitive, personally identifiable information, or PII. And the second reason is that the ongoing need to update FinCEN with any business changes presents a lot of complexity for whoever takes on that responsibility. So put those two things together, and they present a technology challenge and data security risk that most firms, they just don't really want to deal with, right? And it's not always just a matter of preference for the law and accounting firms as well. Bear in mind, many of them have internal compliance protocols that limit their ability to provide a service like this directly to their clients. Of course, Accountants and attorneys want to meet this need for their clients. They recognize the importance of the requirement and want to take advantage of the opportunity to provide value to their clients. So many are exploring partnering with third party providers like Harbor Compliance to handle the filings for their clients. And by doing this, it allows them to educate the clients the way that their clients are expecting them to, and at the same time, offer a solution that meets their needs without having to build all that technology or touch that PII data that would put their firms at risk. So, long story short, accountants, attorneys, they are going to play a big role in helping their clients meet BOI reporting requirements. No doubt about that. But for the most part, it probably won't involve submitting the BOI reports for their clients themselves. Rather, they're going to refer their clients to partners to manage the filing requirements. They'll make the warm handoff. Or in many cases, they'll work with their partners, they'll identify a vendor and embed the BOI reporting technology into their back office process, providing a seamless brand experience for their clients. So the clients may not necessarily recognize that there's another person, another firm involved in doing the filing, but they are protected against having to collect all that data and build the technology. They just plug in that partner. Among the minority of business owners who are aware of BOI reporting requirements, the big question on their minds is, do these requirements apply to my business? In the lead up to the filing window opening on January 1st, 2024, FinCEN provided estimates of the number of organizations that would be impacted that are very telling. And I've already sort of snuck in this number, but setting aside exceptions for sole proprietorships, estate plan trusts, and general partnerships, FinCEN estimated that roughly 32 million reporting companies existed as of January 1st, 2024. Further, they estimated that roughly 5 million new reporting companies would be registered this year and each year thereafter. So that's roughly 97% of all organizations registered in the US. Those numbers are overwhelming. Put simply, the vast majority of businesses are going to have to report BOI. Now, granted, there are some exemptions for specific types of organizations. In fact, there are 23 different exemption categories. However, these tend to be narrow and apply to highly regulated organizations like banks, insurance providers, utilities, or nonprofits with federal tax exemptions. Note on the nonprofits, those that aren't federally tax exempt, they'll generally have to report. You think about why that might be. For those organizations that are already highly regulated, they're already disclosing all sorts of additional information to the government about their activities through license filings and other reports. So reporting BOI wouldn't necessarily reveal anything new the government didn't already know about them. If you're wondering if your organization will qualify for any of these exemptions, our free exemption quiz can help you quickly determine your eligibility. And we'll provide a link to that exemption quiz following the presentation and actually in some later slides as well. So while there are many niche exemptions that apply to highly specific entities, there is one broad exemption to be aware of, and that is the large operating company exemption. So a little bit about this. This large operating company exemption excludes entities with at least 20 full-time employees, a U.S. operating presence, and a tax return reporting over $5 million in gross receipts from reporting BOI. This exemption also applies to subsidiaries of such entities. That said, FinCEN has also clarified that you're not able to consolidate employees across multiple entities to meet the criteria of a large operating company. So put another way, for owners of multiple entities to qualify for this exemption, each and every individual entity must meet all three criteria. So time for the next poll question here. Let's find out how many of you fall into this category of large operating companies. My apologies. Looks like that poll question isn't loading for me. We'll come back around, not a problem. There will be a follow-up survey that will ask a very similar question. Okay, moving on to our next slide. Assuming an entity doesn't fall into the roughly 3% of companies that are expected to be exempt from reporting BOI, owners need to know when their initial report is due. If the business is one of the roughly 32 million reporting companies FinCEN estimated to be in existence as of the end of 2023, owners are in luck. They have some time before the report is due. Not much time, but they have some time. However, as we'll discuss later in the presentation, it might be in their best interest to report BOI sooner rather than later anyway. On the other hand, if the entity was formed or registered to do business in the US during the current calendar year, its reporting deadline may have already passed. FinCEN expects to receive an initial BOI report within just 90 days of formation or registration. So that means entities that were formed earlier this year should have already filed their initial BOI reports. And expectations, as I mentioned earlier, are even stricter for future entities. After this year, after 2024, newly formed or registered entities will have to submit their BOI report within just 30 days. It's important to understand that BOI reporting isn't a one-time requirement. Remember, BOI reporting requirements allow the federal government to more easily follow the money and identify those bad actors behind complex corporate structures. That's only going to work if the information that FinCEN has on file is up to date. And that means that any BOI reported to FinCEN must be updated as soon as it changes. Otherwise, the information on file would quickly become outdated. Accordingly, FinCEN offers report types to collect not only initial information submissions, but updates and corrections as well. Updated reports are used to notify FinCEN of changes to reported BOI. For example, making changes to an organization's name, registering a DBA, updating its address, and changing its ownership would all trigger an updated report. Updated reports must be filed within 30 days of the underlying change event occurring. Updated reports are also used to notify FinCEN when an entity's exemption eligibility has changed. And we've carved that out in the item number 4 there, newly exempt entities. For example, consider a nonprofit corporation formed this year that intends to apply for its federal tax exemption. They want to get a 501c3 status. The IRS's tax exemption process may take longer than 90 days. In fact, it usually does. That means that in the meantime, the nonprofit will need to report BOI to FinCEN while its federal tax exemption is pending. And then once the tax exempt status is granted by the IRS and they officially become a recognized 501c3 entity, the nonprofit would file an updated, newly exempt report to notify FinCEN it's no longer required to maintain up-to-date BOI. Finally, corrected reports. FinCEN understands that some honest mistakes in reporting are going to be inevitable, and the agency offers corrected reports to fix inaccuracies in previously submitted BOI filings. Entities have 30 days to submit a corrected BOI report from the date the owner became aware of the inaccuracy. While technically speaking, it's possible for a business to only have to report BOI once, that assumes none of its underlying information changes over its entire life cycle. Okay. Next, let's discuss why reporting BOI should be a priority for every business. First, reporting under the Corporate Transparency Act is the law, and there is a public benefit component to that. Up until now, the US has actually lagged behind the rest of the world in terms of corporate transparency requirements. The CTA catches the US up with many other countries in identifying legitimate owners of business entities and cracking down on illicit activities. Just as a business files its tax returns and maintains licenses for its industry, BOI reporting is just another best practice in demonstrating good corporate citizenship. And if good corporate citizenship alone isn't enough motivation for you, and who isn't that enough motivation for? I mean, come on. If that's not enough, you need to be aware the government has also introduced some sticks in the form of fines and penalties to go along with that carrot. So let's dig into what those are. As we've covered, the CTA has been lost since 2021. Despite that fact, many business owners are unaware of the requirements and how they impact their organization. BOI reporting is not optional, and not submitting an accurate report timely can expose businesses to significant penalties. Technically, no one needed to report BOI to FinCEN in the first 89 days of the year, but we're in the latter half of 2024 at this point, and we are well past that grace period. So FinCEN is now penalizing companies for failure to file BOI reports. This fact alone has moved BOI reporting to the top of a lot of company priority lists. And there are two distinct BOI reporting violations. First would be the willful provision or attempt to provide false information in a BOI report. The second is willful failure to provide a complete, updated report. And in either case, businesses may face civil or criminal penalties. As far as civil penalties are concerned, the violations can result in fines of up to $591 a day, capped at $11,280. And those numbers, they were increased as of January 25th to account for inflation. So whereas before you might have seen a $500 a day penalty with a $10,000 cap, well, you can thank inflation, fees are going up. And with respect to criminal penalties, up to 2 years of imprisonment may result. Note that this isn't an either or scenario, and both civil and criminal penalties may be enforced simultaneously. There are really just two approaches business owners can use to be compliant when reporting BOI. The common sense, practical approach, really, and also the most comprehensive way to achieve compliance is to immediately report BOI for all the entities, every entity that could reasonably be impacted by the new requirements. And by taking that proactive approach, business owners avoid paralysis by analysis and put the requirement behind them as fast as possible. This would especially apply to any entities formed after January 1st of this year, because they'd had just 90 days to report. Business owners that take this approach also avoid having to complete the report towards the end of the year when FinCEN will be busiest, inevitably. FinCEN is set to receive an enormous amount of information from millions of users in a relatively short amount of time, and it remains to be seen if their system and staff will be able to accommodate that volume. If worse comes to worse and their system can't keep up, preventing businesses from filing, nobody's guaranteeing that that deadline is going to be extended. Now, on the one hand, by simply reporting now and keeping the information up to date, the likelihood of being penalized is virtually eliminated because there are no filing violations for entities that report even when they're not required to. And in the future, if the owner determines their entity is exempt from having to report BOI, file that updated report. Submit that to eliminate the need to maintain the information going forward. Simple as that. But on the other hand, business owners have the option to closely scrutinize the exemption criteria and define the beneficial owners for each and every one of their entities. This may include enlisting the help of an attorney to make a legal determination on whether or not they need to report. This approach ensures BOI is reported for only the entities that are absolutely required to provide it. However, not every business will want to spend the money to have an attorney review their exemption eligibility and ownership structure. Not to mention, a legal review can take time. So this approach might not be ideal for those who just want to put the requirement behind them quickly. Additionally, newly formed or registered businesses, which have only 90 days to report, might not have the time to wait for a full legal determination. Ultimately, organizations have to weigh the cost of reporting BOI right now with the cost of scrutinizing the how and scrutinizing how the requirements impact their business and the potential risks of delaying the report. So we encourage businesses to take the proactive approach. Just report. It's not the end of the world. You can always file to declare your exemption later and not have to report it going forward. On the flip, though, for those of you in the audience who are interested in speaking with an attorney about this, we have partners within our network. And I'd encourage you, reach out to us. We'd be happy to pass you along to the folks who can give you that legal determination. And within our network, I'm sure that we can get you the right answer and the right guidance so that you can have the requirements met. All that being said, we have a takeaway for everyone on the call today. This is your homework assignment. Bear in mind that maintaining legal compliance is not only the law, it is a best practice for businesses of all kinds. BOI reporting is now a reality of operating a compliant business. So your job immediately after the presentation is to share what you've learned today with the broader organization. and ownership. And as we've covered, it's an established fact. Many business owners don't know about BOI reporting requirements or the risks of failing to report. Don't let your organization fall into that category. For all you attorneys and CPAs on our call today, you may not need or want to be experts in the CTA, yet your clients need to know about the requirements and how it impacts them. Certainly, we hope that this presentation gives you some high-level information to direct clients to find a solution. If you're like one of the many other firms that we work with, we'd be happy to collaborate with you on educating your firm and clients in a similar format to this one. And regardless of your role or your firm's position on offering a CTA solution, take that initiative, start the conversation within your organization. Encourage everyone to educate themselves on the topic and advocate for your organization's prioritization of compliance. Okay, so now before we get into what it takes to manage BOI reporting, I will attempt to launch yet another poll question. How are you managing the process? I am curious to know, how is your organization currently staying on top of BOI reporting requirements? Okay, so very few people choosing, we expect our law firm to help, or we expect our accounting firm to help. Maybe I tipped you off that they are not going to necessarily swoop in to save you on those items, but that's just fine. We can certainly support them, help them navigate it on your behalf. Okay. Looks like there's a number of organizations who haven't started gathering the beneficial ownership information yet. Nothing to be ashamed of there. Not a problem. Deadline, if you were in existence prior to this year, won't be until the end of the year anyway. Thank you very much for submitting those answers. Close that poll up. Okay. Now let's get into it. What does it take to report? Let's move on and discuss what's involved. There are really 4 phases to reporting. Research, file, monitor, and maintain. Those are the buckets. Okay. And the first 2 parts to the research phase are, first, to determine whether or not you'll have to report BOI, and second, to gather the information needed to complete the report. So again, the most common question we get when discussing BOI with clients is, what does this apply to my organization? And the easiest way to answer that question is by taking our free exemption quiz. So I'll advance the slide here. You can scan that QR code in the corner of your screen, and by doing so, it will take you to our BOI reporting exemption quiz. It takes just a few minutes to complete, and the results will be sent to your inbox within minutes. Now, I do want to be clear, that quiz, it offers only general guidance and isn't meant to replace legal advice from an attorney. But once you've confirmed your organization will need to report, and this will be helpful in doing that, now it's going to be time to gather the information required to file. If you didn't catch that QR code, or you don't have your cell phone handy at the moment, not a problem. We'll get you a link to that exemption quiz just the same after the presentation. Every organization must report 2 types of information. As we've already covered, company and individual are required. Required company information is pretty basic, includes things like company name, address, formation jurisdiction. The information required of individuals is also pretty straightforward: name, date of birth, residential address, etc. Note that the 2 different categories are present here. You need to be aware of that. Your beneficial owners and your company applicants. Basically, all the same information is required for both. A quick note on the FinCEN IDs, which I mentioned earlier in the presentation. FinCEN can issue IDs to both individuals and companies, and that ID can be then entered into the BOI report, eliminating the need to type in specific details for each filing. That approach can save you some time, especially for clients with multiple entities and multiple beneficial owners. Now, at first, gathering information to complete a BOI report seems pretty simple, right? But there is more to this than meets the eye. Before you reach out and start collecting information from all your beneficial owners and company applicants, you need to consider 2 very important factors. Number 1 is the security of the data you're collecting, and number 2 is the time you'll invest to collect it. First up, data security. The residential addresses, the images of the government IDs, and the other personal details required in a BOI report constitute personally identifiable information, or PII, I've already covered this, right? You remember that from earlier in the presentation. You need to have certain security protocols in place when transferring and storing PII to prevent this sensitive information from falling into the wrong hands. And simply emailing or texting PII back and forth or storing it in shared documents, that's no bueno. That's not necessarily secure. This is a real risk to your business. And believe me, you don't want to invest in creating a secure private environment to collect and store this information on your own when you could save yourself a lot of time, effort, and money by working with a partner like Harbor Compliance. Our information collection process includes all the necessary protections to allow you to confidently request that information, store it, and maintain the sensitive PII needed in the filing. So let's also think about the time that you're investing to do this. FinCEN estimates that completing a single BOI report is going to take about 3 hours. Reporting is much more time consuming for organizations with multiple legal entities and or individuals because they'll just have so much more data to gather and type that stuff into FinCEN's filing portal known as the Beneficial Ownership Secure System, or BOSS. Having to enter that same information over and over again across entities is tedious and it's error prone, especially if you're delegating that task to a single person and it's just one person whose eyes are glazing over looking at the dozens and dozens potential submissions. So imagine being that person who that work would be delegated to. You're a trusted admin at a multi-entity organization reporting BOI. CEO comes to you and says, gather everything required to report BOI for all of our entities under the company umbrella. So to do that, you'll need to navigate the ownership and management structure for every entity, find the right individuals, find their contact information, contact them all by phone, not email, to protect the POI you'll need to collect, field all their follow-up questions because they'll never be like, why do you need to know what my home address is? About why this information is necessary and what information is being used in the filing and what for. And that's all before you've ever even filed anything, before you've completed any submissions. So now you'll need to navigate to the BOSS portal and manually type in the company details for the reporting company. You'll also add the beneficial owners. And if it was formed before 2024, or excuse me, in 2024, you'll have to add the company applicants. Then you'll type in the personal info of each and every individual that needs to be disclosed for that reporting company. You'll hit submit, and congratulations. You have just completed the filing for one of your entities. Now you get to repeat that process over and over again for every one of the reporting companies in the umbrella. Of course, it doesn't stop there because you'll have to monitor that data as it changes. I'm getting a little ahead of myself though. So now imagine just how much worse this data entry problem really is for service companies with hundreds or thousands of client entities. It can be a real headache. The point is, what I'm driving at is that Harbor Compliance saves you a ton of time by allowing you or your admin to send dedicated information collection forms to each and every one of your individuals. And this approach keeps your data safe and avoids sharing PII via email where it could be intercepted by bad actors. You simply enter the person's email address and our system goes to work collecting the required data. And since it's our system collecting the data, you don't have to worry about contacting anyone to explain what a BOI report is or why the requested data is needed. The system's interface and notifications handle all of that. It's all built in. Not to mention, our information form is just easy. It provides a more user-friendly experience than the BOSS portal with more helpful explanations and an intuitive design. So once you've run the gauntlet of collecting all the required information securely, it's time to access the FinCEN system and file. In our experience, the BOSS portal itself is fairly usable, but like any piece of technology, it has its imperfections. The main one for this system is that it tends to time out if a report isn't completed quickly enough. So put yourself back in that admin's shoes and imagine getting 3/4 of the way done with the 58 question form before your boss comes to you and says, hey, I have another task for you. You got to set that aside. And when you come back to the form, you realize the system timed out and you have to start from square one. Not a fun time. Not a good place to be. The beauty of working with the Harbor Compliance system is that you don't need to interact with FinCEN, right? We insulate you and your staff from many of these inconveniences. Quick side note on the FinCEN API. FinCEN offers a publicly available API that allows users to pass BOI reporting information directly into their system, sidestepping the manual data entry required by the BOSS portal. And in theory, it makes the reporting process much faster when submitting filings in large volume. However, you need to be pretty technical to be able to connect that API, and you'll have to invest time and effort to get that automation working. That puts the API out of reach of most firms. That said, anyone looking to outsource BOI reports, especially at scale, they need to ask the prospective partner if they're connected to the API. This is something that we've already taken care of. When you're working with Harbor Compliance, you can rest assured you're working with the most advanced approaches to information collection and transmission out there. And while we're completing the reports on your behalf, you'll maintain complete visibility into our progress via the easy-to-use project status screen, which allows you to communicate with our team of experts responsible for submitting your filings. But the most important benefit is how your data is organized. We centrally store everything you share with us so it can be readily accessed across multiple reports. Regardless of how many BOI reports your organization needs to submit, each data point is requested only once. If you're a direct client, you provide the details for each of your reporting companies one time via our secure web-based information form. Each of the beneficial owners and company applicants receives their own customized form in their email inbox, which they also fill out just one time. For partners, it's even easier. You securely send us a bulk file of your client entities and their beneficial owners and company applicants. We import the reporting companies into our system, send the individuals their own information collection forms. Your reports are then prepared on your behalf, eliminating the need for you or your clients to key in the details multiple times across entities. That brings us to Monitor. And I've mentioned it before, but I'll say it again. I can't stress enough the recurring nature of BOI reporting. This is not a once and done filing. FinCEN expects to have up-to-date BOI on file at all times. In practice, you'll need to take a snapshot of whatever data you report to FinCEN, share it with all of your beneficial owners, and take time to routinely review that information to make sure you catch changes as early as possible. You'll be building a new business process to monitor aspects of your beneficial owners' lives that you may never have been privy to before. You'll need to start proactively asking beneficial owners if and when they plan to move residences, change their legal names, etc. And monitoring doesn't stop with individuals. You'll need to be in close touch with anybody able to make changes to your company level details. Is your business moving offices? An updated report may be triggered. Are you planning to register a new DBA or trade name as part of a rebranding effort? Time to file an updated report. Are you planning to sell an ownership stake to raise funds? You could be facing yet another updated report. Monitoring also extends to the requirement itself. And maybe you've heard about the challenge of the CTA in Alabama, brought by the National Small Business Association. That case is still being appealed, but regardless, it only applies to the plaintiffs in that case. Certainly, future legal challenges may impact reporting requirements for some businesses. You'll also need to stay on top of any of the new requirements or guidance released by FinCEN, as well as any new copycat legislation at the state level that we mentioned at the beginning of the presentation. So when you work with Harbor Compliance, you'll be able to see all of the most recent information in your client portal and can easily and securely collaborate with all your individuals. Not only that, you'll receive automated reminders to check in with your key stakeholders, and you'll benefit from our close monitoring of FinCEN and state level requirements. And finally, you actually have to act on changes to all that data that you're monitoring by submitting and updating updated and corrected reports. Both must be submitted within 30 days of learning of the underlying change event. Failure to do so risks all the same penalties as not submitting the initial report on time. This is where Harbor Compliance really shines. Not only does our BOI reporting service include up to 4 initial updated and corrected reports per year, but the data we store for your reports is processed by our compliance core algorithm. The result is actionable insight into what you need to maintain not only your BOI reporting obligations, but the good standing of your legal entities, business licenses, and tax registrations. With the power of Compliance Core, we're right there to help you navigate over 22,000 filing requirements nationwide. So what does it take to manage BOI reporting compliance? Well, in theory, you could invest time building systems and processes to securely gather and store all the required information. You could prepare the filings on all on your own and muddle through the BOSS portal filing process. You could set notifications to track changes to the reported information and the filing requirement itself. You could budget the time and resources to complete, updated, and correct your reports every time something inevitably changes. You could build all of these cumbersome processes into your daily routine, or you could lean on Harbor Compliance to just take care of it. That's the calculus. So that concludes our presentation for today. I apologize. I got a little long-winded here. We're at 46 minutes already. So I'm going to go through the top 3 or 4 questions that I've received so far. And those that we don't get to, don't worry about it. We'll follow up with a response. Not a problem. We'll get those questions answered. But these are the top ones that rolled in during registration. Off the top, what if the BOI report contains inaccuracies? If you discover any errors in that BOI report, like we covered, you'll have to update them. You'll have to file that report within 30 days of noticing those inaccuracies. You won't face any penalties for filing that inaccurate report just as long as you correct it within 90 calendar days. Just make sure that you're submitting your updated report. Next up, if my company is owned by a parent company, can I report the parent company as a beneficial owner? Quick answer, no, doesn't work that way. A beneficial owner must be a natural person. Companies aren't considered beneficial owners. So if your company is owned by a parent company, you need the individuals who are the beneficial owners of the parent company. Do you have to report your officers and directors' home addresses in your BOI report? The BOI report asks for a residential address. Okay. Additionally, you need an image of the government issued ID. Okay. So even if the filer put a business address on the line, which technically I guess you could do that, it may not be accurate, but put a business address on the line in place of the residential address, the ID is still going to list the individual's home address. So there's kind of no way to get around that. The copy of the ID image is always going to include that person's location. And one more before we wrap things up here, I'll give you some time back in your day. Do all the different states require this, or the state your entity was created in? Okay, so I think there might be some confusion here. This, as I mentioned at the beginning of the presentation, is a federal level requirement. BOI reporting is managed by FinCEN. It's a federal agency that falls under the Department of Treasury. That is where these filings are being submitted. There are a bunch of copycat state level requirements that are in process right now. New York has already passed theirs and it's in force, and people will have to report very shortly. There may be more to come in other states, but New York is the one that's already in right now. So with that, I want to thank you for your time and attention. I appreciate your flexibility and your generosity with your time, sticking around, staying with me today. If there are any questions, my contact information is on the screen. Don't hesitate to reach out. I would be happy to field any questions we didn't get to. Thank you all very much and have a great rest of your day.